Good morning, everyone. Good afternoon, I should say.
Good afternoon.
Oh, I said it took me so long to get on here. I was having a hard time opening from Chrome, but we're here now, and we'll get started pretty soon.
I'm glad you solved your technical issue there, Amy.
Thank you, Matt. I had to open up a different browser. Chrome just didn't want to work.
It's being testy.
It was.
Good afternoon, everyone. We're waiting for people to join. It's a couple minutes before the hour anyway, but we're waiting for probably, I don't know, 20, 25, 30 people to join if the registrations were accurate. And so we'll wait for a few more people to show up. But in the meanwhile, if you're new to Zoom, haven't done this before, if you hover over the Zoom window, generally you get a toolbar at the bottom, and the bottom allows you to turn on and off your mic, turn on and off your video, allows you to click and make sure that the chat box can open so that you can submit a question. And so those are things that you can control with it. I'm sort of referring to the interface that's a little more commonly used on a PC, but all those functions are available to anybody using Zoom. So we're planning to not have everyone's mics turned on. We're planning to have them basically turned off other than the presenters, and we're hoping to have all the questions submitted through the chat window. So if you expect to do questions, then make sure you know where you can find the chat window, open it up, submit a question to and don't send it to any one presenter, send it to everyone, and we'll all be able to see it. And then as we go through questions, we'll be able to make sure that we try and cover off on all of them for all attendees. Thanks for doing that. We're going to have to do background music or something for our openings and closings if we keep doing this many webinars.
Maybe you could sing a song now.
Yeah, I was thinking we wanted to keep people around.
Oh, that's true. Well, I know there were a few people that registered so that they could get the recordings and the slide deck afterwards. So
Right.
It might be okay to get started. Although it does look like we've got more people signing in.
few more. We'll maybe just go one more minute, and then we'll
Okay.
plan to kick off.
Okay.
Thanks everybody for joining so far. You're joining a webinar that's going to have Twyla Kennedy and representative from the SBA presenting on the loan programs, and it's hosted by the Small Business Development Center in West Central Minnesota, hosted at Concordia College in Moorhead, and specifically the Offutt School of Business at Concordia College is where the SBDC is located for West Central Minnesota. SBDCs, Small Business Development Centers, all over the country, all over the US territories and that kind of thing. There's an SBDC near you. I bet many of you might know us because of that, but if you're just on here by happenstance, Small Business Development Centers offer no fee consulting to small businesses, and we are happy to give you advisory services and help you out at any time, but obviously during this particular point in time and this crisis, we're trying to be as helpful as possible with information. So I think we might go ahead and get started. Welcome, my name's Matt Magnus. I'm the Executive Director of the Small Business Development Center hosted at Concordia College in Moorhead, Minnesota, and the Offutt School of Business. And we're going to have Twyla Kennedy from the SBA presenting for us in just a minute. And but I will do the housekeeping of just saying we're going to take all the questions via the chat window. So make sure you can figure out how to open that. If you hover over the slide deck in front of you on a PC, or look for the menu to make sure you can get to the chat box, that's where we'll take all the questions, or we plan to. And with that, I'm going to introduce Twyla. She is by title a lead economic development specialist, works out of the Minnesota District Office of the SBA. And she is going to go through the slide deck covering a lot of the loan options, and then trying to field questions on them. Probably the most questions maybe around PPP right at the moment in terms of that particular program, but we'll try to be open, I think, to most questions, and hopefully we can clarify with you. And Twyla, are you there? And I'll hand it to you.
Sounds good, Matt. Am I coming through loud and clear?
Very good. I can hear you nicely myself, so hopefully that's for everybody.
All right, thank you. And you know, I just want to thank Matt and Amy for hosting today and reiterate the services that they provide are, to me, especially now, one of the things that I'm seeing in the process of talking to a lot of small business owners during the crisis is the services that they provide are really vital. So if you haven't made a connection with them, do, because I think that you will find they are able to answer a lot of questions and really provide you some assistance that you didn't know that you needed. So for me, I am located in the Minnesota District Office. I'm a federal employee, but located here in Minneapolis. And my job lately has been to try to clear up questions and provide information about SBA's disaster funding programs that we have right now. So as you can see, the topic today is our funding programs. The nation's small businesses now are facing really an unprecedented economic disruption because of the coronavirus outbreak. So these programs were set up by and large out of the CARES Act from a week or so ago. It's only been a week, I can't believe it. So in response to the pandemic, we are providing services to small business owners and nonprofit organizations in all states and Washington, D.C. and territories. A couple of things I want to start off with is the fact that you can have multiple SBA loans, but you can only have one payment protection program loan and one EIDL loan per business. So it could be that you maybe have an SBA guaranteed 7A loan, or you might even have another disaster loan from another disaster. You can get loans in this program though, and in this particular disaster. Another question that we get quite a bit, applicants do have to have either a social security number or an EIN number to be able to apply for the programs. And and I think this is true lots of times, but at this time, especially with the high volume, providing complete and accurate information so that those reviewing the applications across all the programs can make speedy and accurate determinations is going to be key for this. So Amy, if you want to flip to the next slide. So the first thing that I'm going to cover today is going to be the Paycheck Protection Program. As of now, that's one of the ones that we're getting most of our questions on. The PPP is a loan designated to provide a direct incentive for small businesses to keep their workers on payroll. After the act was put into place, eligible nonprofits were opened up to include faith-based organizations as well as small businesses. So what you see there from the size standard perspective is that we're looking at employers with under 500 employees, but if somebody is over 500 but knows that their business is small based on SBA size standards, you just need to verify that on the size standards table and you would be eligible as well. You can see veterans organizations are available. We've been getting some calls from DFWs about applying for the programs. And as of Friday, sole proprietors, independent contractors, and self-employed individuals will be eligible to apply. Now, the purpose of the loan is to cover 8 weeks of payroll, interest on mortgages, rents, and utilities. And those payroll costs would include things like salaries and wages, cash tips, vacation and sick leave, and a variety of other benefits. Many folks have heard that this is going to be a forgivable loan, and it will be as long as a substantial portion, which in this case is going to be 75%. So 75% of the loan needs to be used by the employer to maintain or quickly rehire employees and maintain salary levels. Keep in mind that if you reduce your full-time headcount or if your salaries and wages decrease, you may lose a portion of the forgiveness. And also for this particular program, again, you can also apply for EIDL. Just know that if the EIDL loan is used to pay for the same expenses as the payment protection program, that what will happen is the EIDL loan will get rolled, the amount for the EIDL loan will get rolled into the PPP, and the lender that you're applying with will then use that to pay off the PPP loan. Next slide, please. So if the loan isn't forgiven, or if portions of it are not forgiven, well, first of all, you can get a loan amount of $10 million, up to $10 million. Any of the forgiven portion is going to be set for 2 years at a 1% interest rate, with the loan payments being deferred for the first 6 months, during which time they will continue to accrue interest. So you can see there the documentation that you're going to need to be able to fill out the application from the borrower perspective. Potentially is going to look at things like payroll records or tax filings, the Form 1099 if you're an independent contractor, income and expense statements if you're a sole proprietor. And I know that those records are going to look a little bit different for each individual business. So what you're going to want to do as a borrower is probably speak with your accountant or your payroll processor, however you handle your payroll, to get the proper documentation that you need to fill out the application. So SBA is not requiring collateral or personal guarantees on any of the loans. And the fees, there is a small fee involved, but the SBA is covering that fee back to the lender. So from a borrower perspective, there are no costs in that manner to apply for the loan. And you are going to be applying directly with the lender. And there's a link there that is a link to those lenders in Minnesota that are eligible to participate in the program. And this list is based off of the lenders that normally do participate in our 7A loan program. The lenders are going to be doing electronic submissions, but I have listed the 2 documents there that you can look at. The Form 2483 is the borrower application, and the Form 2484 is the lender application. I think it helps to look at those in advance. By and large, the borrowers are going to be certifying and signing as they're certifying that the information that they're providing is correct. The lender on the other side is going to be trying to verify that information, and they're also going to be signing that they verified the information. So I think it's helpful to see what sorts of questions are going to be asked and what potential documentation you may want to have available to fill out the application. And then I've also got a link there on the bottom of the page directly to the Paycheck Protection Program website on our SBA.gov website. And there is a little bit more information there. There's access to some other documentation and some frequently asked questions in case you have that. And for this particular program, the deadline to apply is going to be June 30th. Next slide. So I've got an example of what, what this looks like in practice. So I had 4 choices of examples. I didn't want to put a whole bunch of them out there. So I chose the one that was the most complex that I had. So in this particular example, you have an employer who has some employees that are making over $100,000. And you have an employer that got an EIDL loan and used some of the EIDL loan for payroll expenses. So as you can see there, you've got this particular example has an annual payroll of $1.5 million. In this particular case, what they're showing is that some of the employees are making in excess of $100,000. So for the PPP loan, we do cap the annual salary at $100,000. That cap only applies to the cash compensation. So it doesn't apply to your non-cash benefits, which would be things like employer contribution to a defined benefit or a retirement plan, payments for group health coverage, if you're paying state and local sales taxes, sick leave, vacation leave. If you're paying those sorts of extra benefits, that does not come into play as far as figuring out what your employees' annual compensation is. We're just looking at like the wages, the tips, that part of the compensation. So what you do is you're going to subtract out the excess cash and tip portion. So in this particular example, that gives us an annual salary amount of $1.2 million. And so on an average, that's going to put us at a monthly average of $100,000. We're giving 2.8, we're multiplying it by 2.8 to determine what that 8-week amount is. So the Paycheck Protection Program, the PPP, is set up to cover 8 weeks of salary, and that's the way that we're determining the 8 weeks is multiplying that monthly amount by 2.5%. We add the $10,000 from the EIDL loan back in there, which gives us a maximum loan amount then of $260,000. So that, yeah, Matt?
I'm just jumping in. I think you misspoke and you said you multiply by 2.8 and you meant 2.5,
yes.
I believe.
Yeah.
So just to let everybody know that the slide is accurate, but you were talking about 8 weeks and then you went to 2.8.
So yeah, I got a few extra numbers in there. Yes, 2.5 to get to the 8-week mark. So that gives you some idea how the loan amount is going to be determined. Next slide. So that covers the PPP, and I know you guys are going to have a lot of questions, and there's so much detail on it that some of it's just easier to answer as a question as opposed to trying to pull lots of stuff on slides. So I'll be able to answer any questions that you have when we get to the end here. The next program that we have for disaster recovery is the Economic Injury Disaster Loan Advance. And so that is an up to $10,000 advance that has a very simple application process. There's a web portal that you go out to. There's about a 3-page 3 pages of questions. It takes about 20 minutes to do. And at the end, you give the SBA your routing information. And the idea is within 3 to 5 business days, we'll be able to get that advance deposited into your checking account. I know that for some folks that have applied, I think the 3 to 5 days was somewhat ambitious, although I know that some businesses are starting to see the advances. So if you applied for the EIDL advance, just know that that money is starting to flow out to the business owners. And that particular program can be used to cover, again, payroll expenses, rent and mortgage payments, and then it would be the kind of the ongoing day-to-day types of things that you need to keep your business open. So things like, you know, keeping your inventory in stock, or, you know, if you're closed, but you've got like pre-existing debt, like if you have a piece of equipment that you're making payments on, your accounts payable, those would be the uses of funds for this particular program. And for the EIDL advance, you will have until December 31st to apply for the program. Next slide. So the eligibility for the EIDL advance is going to be nonprofits and for-profit small businesses. The one group that's not eligible for this program but was eligible for the PPP is ag businesses. So ag businesses are eligible for the PPP loan, but they are not eligible for the EIDL advance. But for the most part, covers many of the same business types and nonprofit types. So the other thing to keep in mind here is that from a standpoint of nonprofits, there are a couple of extra categories that are eligible, because 501c3s were eligible and 501c19s for PPP. In this particular category, we also have the 501d or 501e nonprofits that are eligible as well. So you'd be looking at nursing homes, daycare centers, rescue organizations, those sorts of things that would be eligible for the EIDL advance. Next slide. So this is the location that you would go to apply for the advance. You see at the top of the page is the web link. It's all online. The first page there, that you select what entity type you are, and then on the following pages you're going to fill in some business information, personal business owner information. The additional information piece covers some character questions, as well as that's where you would select that you want the advance, as well as provide the depository information for the disbursement. Next slide. So the bottom, what you see on this slide, and this is at the bottom of that same page, these are 7 check boxes that you have to be able to answer. You have to be able to check the boxes and show that you are eligible for this loan. If you have any questions about whether or not you believe you should be eligible, you can contact the Disaster Customer Service. They have a website and an 800 number that you can contact to get eligibility questions answered. Unfortunately, at the district office, we're not making the decisions on the lending piece. So while we can speak on kind of a broad view of what the eligibility looks like, sometimes there are some questions that get a little more in the weeds that we don't have the answers to. And as you note on this page, you will see that agricultural businesses are the 3rd point down, and they are specifically listed as being not eligible for the EIDL advance. All right, next slide. So the EIDL advance program, the PPP program is a lender-based program. The EIDL advance program is an SBA-specific program. And now we're back to another specific lender. This is a lender program. So this is our SBA Express Bridge Loan program. So this program is open to small business owners who are current customers of our SBA guaranteed lenders, who also have the ability to do express loans. And you can see that I have a link to that list of lenders. And we have about 175 express lenders in the state of Minnesota. So there's a fairly good sized list. So if you think that you may be interested in this particular program, what you'd want to do is check and see if your lender is listed as being an express lender. This, again, this is because it's an SBA guaranteed program, you are working with a lender, they're making the decision on the loan, and so because of that, they are able to disperse the loan proceeds fairly quickly. This is a loan program because it is one of our guaranteed loan programs. It does follow basically the same rules that our express loan program. So you can see that it does have an interest rate of prime plus 6%. That's our 6.5%. That would be the maximum loan amount that the lender charge. This loan is up to $25,000 for up to 7 years. So the idea initially with this loan is that if the small business owner gets permanent disaster funding via the EIDL process, potentially they would use that funding to pay off this loan. That's why they call it a bridge loan. But the lender can go ahead and carry the loan for 7 years if at their discretion. And it is used for working capital, and pretty much it can be used for any kind of working capital. We're not requiring collateral on these loans, but because this is a regular SBA Express loan, there is a personal guarantee that is required. And again, I have the link at the bottom of this page that goes back to the SBA's website with some more information on the Express Loan Program. And this program has a deadline filing of March 31st of 2021. Next slide. All right, so SBA debt relief. So the debt relief program is geared at our current 504, 7A, or microloan borrowers. And then in addition to that, it's open to any new 504, 7A, and microloans that are made between March 27th and September 26th. Again, because this is it's following pretty much our regular loan programs. The loan specifics, so the specifics of the program are going to follow the specifics of the 504, the 7A, and the microloan program. So for instance, the 504 program can only be used to finance capital equipment purchases and real estate purchases, or buildings that are, basically if you're buying a building or if you're building a building from scratch, they would be eligible for the 504 program. It doesn't cover things like working capital or startup costs. The 7A program, on the other hand, has a much broader use, could be used for real estate, but it can also be used for working capital. It could be used for, purchases of any types of equipment. And the 504 loans are done by a group of certified development companies, which we have. There's a link at the bottom of the page that links to our resource guide. So the list of 504 or certified development companies is going to be listed in our resource guide. 7A lending, we have a list of 7A lenders. Again, it's pretty much the same group that's in that payment protection program list. And then microlending is a little bit different. We have specific microlenders. That's a program that SBA uses. We have nonprofit mission-based lenders that participate in those programs, and they cover a specific geographic area. So it'll either be a county, it may just be a municipality, but by and large, they're going to be covering a specific county. And within our resource guide, you can see the list of microlenders and what counties they cover. Their lending is mostly working capital lending, but they can do loans up to $50,000. And because they're not going through regular, the regular types of oversight that lenders do, they sometimes have a little more flexibility in working with borrowers. And as you can see, the collateral required for each of those different types of loans is going to be a little bit different. In the case of the 504, the collateral is going to be whatever you purchased with the project proceeds. In the case of 7A, it could be that, or it could be other business assets. And in the case of microloans, it's generally at the discretion of the microlender what they determine they need to have for collateral. And next slide. So as you can see there, in the case of these programs, because they are following the regular rules, they do require personal guarantees. As a general rule, that's always the way it is with SBA's guaranteed lending, is that we require personal guarantees on the loans. So the way this program is working is that SBA will cover the principal, interest, and fees on the loan for a period of 6 months. So what that means is that basically it's it's a way for us to assist those businesses that are going to continue participating in our regular lending programs. As you can see there, there's a link to the list of participating lenders and a link to the information on the SBA Debt Relief Program. And the deadline for applying for new loans, as you can see there, is September 26th. Next slide. All right, so that covers the portion of what I was going to cover on our particular lending programs, but there are a few other pieces of information that I think it's important for any of the borrowers, and if there's any lenders on the call, any small business owners to have. And the first that I want to point out is that you can get assistance from our SBA resource partners. I've been at SBA for about 22 years, and I think that we have some of the best resource partners around. And the SBDC in Moorhead works with lots of small business owners. And I firmly believe that working with one of our resource partners puts a business owner in a much stronger position to get through some of the things, some of the ups and downs that business owners do go through. And you can see there that we've got I've got a link to the SBDC website. The SBDC program is funded in part by SBA and in part by the state of Minnesota through the Department of Employment and Economic Development. So if you visit that website, you can see which one of the SBDCs would be closest to you if you happen to be calling in and you're not necessarily in Matt and Amy's area. We have SCORE chapters around the state, and you can get connected with a SCORE mentor at score.org. You go out to the website, put your zip code in, and they will connect you with the closest SCORE chapter that's available. We have 3 women's business centers in the state. Women Venture is located in the metro area, and then the Women's Business Alliance has a Women's Business Alliance Central and a Women's Business Alliance North, which is in Duluth. The central location is in Little Falls, so depending on how far south you are, you may be able to receive assistance from the Women's Business Alliance Central. And then we also have a regional Veterans Business Outreach Center. We call it a VBOC. They're located in Wisconsin, but they do provide services in Minnesota as part of the region. And if you're a veteran, it's always helpful to connect with them because they sometimes have knowledge of resources that are specific to veterans that potentially we may not know about in the district office.
Hey,
next slide.
I would just add that the North Dakota Women's Business Center and VBOC also have permission to work with businesses in our region. So if you're looking for one that's a little closer in Fargo and would be willing to talk to someone there, that would work too. That would be available too.
Well, and that's really good to know. And one thing I do have to say about the North Dakota SBA district office, we partner with them. You know, obviously we're all SBA, but they are a really good partner for us. And from the standpoint of how far away I am from Moorhead, I know that Matt and Amy work pretty closely with the North Dakota district office staff. So it's nice to have all of those sorts of wraparound services available. So the next slide up here is some other resources available in Minnesota. And the reason that I like to present this is that I think that at all levels of government, I obviously am federal. I've been on lots of calls with folks from the state of Minnesota and at the city and county levels, and at all levels of government, officials are trying to figure out, you know, what sort of resources do we need to provide to make sure that we have a good safety net for the communities that are in the area. So within the state of Minnesota, and I don't know, I'm not an expert on their programs, I know a few things, that emergency loan program is one that is specifically for those businesses that were affected by the first 2 executive orders that Governor Walz came out with. So the microbreweries, the restaurants, the hair salons, the bowling alleys, and some of those places. The guaranteed loan program, though, has a much broader possibility for users. And so I would say that if you know, as you're looking at SBA's resources, you also want to be looking at the state of Minnesota's resources as well, because they are standing up some guaranteed programs. In addition to that, they have some frequently asked questions, and they're aggregating some really good resources on DEED's website, and they have, they're calling it a guide for small businesses who need help, I believe, or something like that. And what they're doing is aggregating as many of the resources as they know about onto one particular location. But I know the unemployment insurance program is changing and changing rapidly. And I know that they've been trying to figure out how to help with like the health insurance resources. So the thing that I would say here is that in addition to checking out these resources, make sure that you sign up for DEED's newsletter so that as things change, you are able to stay on top of any of the changes that happen. So if they have new programs that open up, or as the unemployment rules are changing, that you have knowledge of them so that you can best support not only yourself, but your employees and anybody else in your ecosystem. I would say as a small business owner, feel free to share any of the things that you're hearing with the other small business owners that you know, because I think it's going to take a village for all of us to survive here. Next slide, Amy. So this is the health resources. We just wanted to make sure that you knew how to contact those, and it's nice to see the state of Minnesota has theirs in a number of other languages to make sure that everybody here in the state of Minnesota understands what we need to do to be practicing safe coronavirus safety. Next slide. So, because of course now we have lots of money floating around, the bad elements out there are trying to get a hold of it. And so we just want to make sure that U.S. small business owners and lenders and anybody else out there know that these fraudulent schemes are out there. One of the ones that we've heard about is people getting an email from SBA.help and thinking that they're getting assistance, or they're talking to SBA when in fact that's not who they're speaking with. We've heard of some where people have been asked to give a credit card number and information, and you know, they will get assistance with filling out their applications. Well, you know, nobody needs to pay to get assistance for these applications. And frankly, if you do want assistance help filling out the applications, I would be contacting one of SBA's resource partners. You know, connect with Matt and Amy, and they can help you answer questions. Next slide. So at this point, I just want to point out that this is the SBA.gov updates is how you would sign up to get access to the Minnesota District Office newsletter. And I can honestly say that things change, it seems like, on a daily basis. And so our public affairs specialist is doing everything she can to make sure that we're keeping anybody who's on our newsletter list current on those changes. And she does also send some of the information out via Twitter, so it's at SBA_Minnesota. If you want to send questions into us, Minneapolis.mn@SBA.gov is a good way to connect with the district office. We have about 10 people there that cover the state of Minnesota, and I would say the box gets covered for at least about 12 to 14 hours a day. There's somebody that's available to answer questions that come into that box. The disaster customer service email address below, that is for questions on the EIDL Advance program. If you have questions on the payment protection program, the SBA debt relief, or the express loan program, you would want to contact the lender that you're working with or whoever your business lender happens to be about those programs. And again, I want to reiterate that if you, sign up for our newsletter, sign up for the deed newsletter, and I would say sign up for your city newsletter, your county newsletter. If they connect via Facebook, just figure out how they're sending current information out to their areas and make sure that you stay connected that way. So with that, that's pretty much all I had as far as a PowerPoint. Matt, if you want to go ahead, and I'll turn it back over to you.
All right. Well, we'll go through some of the questions that are have been entered in the chat, and so that's how we're fielding questions. So if you have questions, go ahead and put them in there. We're going to try and do them sort of in the order or topical based off the order that they were entered. And Peter submitted the first question, Twyla. It says, question for business or nonprofit closed due to governor order and not considered essential, and so is still closed. And they potentially are looking for a PPP that's forgivable, and yet the assumption here is we're going to start paying them basically to work, but in some cases they can't work because of the directive. Is there anything that can be done about when the 8 weeks of forgivable PPP expenses can be spent? Is it as soon as the loan is achieved, or is it following up? Forgive me, I'm sort of paraphrasing from multiple questions in the group chat, but it's largely around PPP and when you get it and which 8 weeks you can sort of use as the weeks you're spending their loan proceeds on.
So I understand that question. That is, I would say that is probably one of the most frequently asked questions that we get. So the idea behind the PPP program is that you're either maintaining or hiring or rehiring your employees. With the idea being that especially if your employees are collecting unemployment right now, is that you're bringing them back off of unemployment so you can pay their salary and provide them with the health care and those benefits that you were providing with them with before. So the thing about the PPP is that the lenders, and this is from my understanding, and again, things change rapidly, so I'm going to tell you what I know right now. So what I know right now is that the lenders are required to disperse the funds within 5 days of approval. So within 5 days of approval, they need to have the borrower sign the note, and they need to do the first fund disbursement, and then potentially by 30 days, they have to have the loan completely dispersed. So again, so the idea, and I think there's an understanding that potentially some people can't be rehired right now because of what's going on. But the intent of the program is for the business owners to be able to maintain their employees on the payroll and continue paying them their pay and whatever sorts of benefits that you've been paying them. We want you to be able to continue to do that.
Right.
So
is there any possibility that, if it takes you 2 weeks to get everyone sort of back working or something like that, there isn't a plan to have the 8-week time slot be able to be tailored or moved at all, by the sounds of it, is what you're saying?
That was, so I will say, Matt, that's my understanding. I was on a call. It was geared more towards our lender relations specialist folks. And the call that I was on, that was what they seemed to indicate, was that they want the disbursements in 5 days. They want to start, and I don't know that's one of the things that I don't know, because obviously you can't say, okay, today it's Tuesday, on Wednesday, everybody needs to come back to you know, everybody needs to come back to work now because, you know, we're bringing you back. So I honestly don't know how that factors in, is the idea that it might take a couple of days for people to get, you know, make arrangements for their kids' daycare so that they can make, you know, so they can rejoin.
Right.
I'm assuming there's a piece of that that's kind of built into how you do the disbursement. But I have not seen any clear guidance on that.
I think there's also these differences of whether or not you're, you know, the governor's order is basically saying don't go back to work. And then what I think you're saying is that doesn't preclude you from potentially being able to pay them. You could potentially employ them again, and you're paying them in order to push cash into the economy to a large degree. But that may not mean that they're physically showing up to work if in fact the governor's order says you shouldn't.
Exactly. I mean, so it's kind of a way for you to be able to continue following the governor's order that they don't want people working, but you can still pay your employees and keep them on your payroll because, you know, there are some businesses that are still out there that are working. And, you know, I'm sure part of the idea too is that, you know, when things open back up, you want your employees to still be there.
Right.
So this is sort of a way for you to be able to do that because you're still paying them. You know, you've been paying them, you've been paying their health care benefits or their vacation time or whatever it is that you normally would pay them. So they've stayed on your payroll, so they're still your employees per se.
Right. Okay, and you could direct them obviously with whatever work might be viable or whatever, even if it's you know, having to be a different thing than maybe their standard role. Now, both Peter and Tim had asked questions in the chat sort of relevant to that topic. I'm wondering if both of them feel as though they got sort of the latest and greatest, even if it's not the answer they were hoping for.
I think so. What I'm hearing is that it would be appropriate to pay our employees to stay home and not work as a retention strategy. That's consistent with the intent of the loan.
Yep, I'd say that that's a fair way to paraphrase it again. Twila, any objection to that?
Nope, I think that, and actually, Peter, that is, I think, a really good way of explaining with many less words than I was using, kind of what they're looking at.
I'm scrolling. Go ahead.
I would just make a comment that where at least our business is going to need significant help is once we do open, when we've depleted all of our working capital, and we will anticipate significant reductions in utilization and volumes for several months. And so while this is fantastic as a way to help our employees and retain our employees, our business is going to be very much impacted to the point where it will be difficult to retain our employees after we start. But maybe that's for the next round.
Well, and I guess, you know, obviously that's not something I can speak real clearly to, but I mean, when we hear what's happening in Washington, I mean, I think that you hear some of those concerns being talked about. So, you know, whether there's more rounds of different types of funding that come out, I think that probably remains to be seen. But I do, you know, I hear that concern. And for me, when I was on the call, one of the things that struck me was, you know, and you guys are in an area where there's lots of resorts. So for the resort owners, they haven't necessarily brought their staff back and may not bring them back until, you know, depending on the decision making as far as opening, it could be June 1st before we can even get back to doing any camping or, you know, any fun at the resort. So I'll be honest, I'm not exactly sure how that piece fits into the PPP, although I do know that there is a formula for, you know, figuring out seasonal workforce. If you look at the borrower application, it's the form 2483 that you'll have a link to it talks about utilizing a time frame from February 15th of 2019 to June 30th of 2019 to try and make a determination on seasonal payroll.
Right. And we may get a little more clarification even in the next few days or something if something like this is being revisited, or if they obviously the other legislative things that are not able to be necessarily expected at this point, but they're certainly talking about incremental financing. So I'm going to go back to another question. Is the 2-year term of PPP after the 6-month deferral, or is it a 2-year term that SBA is, I think there's references to the deferrals in both the relief part of the bill that is different, but if we say and stick to PPP right at the moment, 2-year term, is that 2 years of payments, or is that 2 years and then 6 months of deferral followed by 18 months of payments? Do you have an idea?
Yeah, it would be the 6 months of deferral followed by the 18 months of payments.
18, okay. So it's 2 years total, but the payments would be fit into the 18 months. All right. Next question is, PPP is based on 2 months of payroll plus 25%. It's certainly the 2.5 multiplying by 2.5 for that monthly average. How does that work for sole proprietors or independent contractors? Is it based on 2 months of their earnings?
So let me just see if I have, I'm checking here to see if I've got something where it speaks to the average for the self-employment.
I know that some of the contractor and self-employed stuff was still supposed to be being released sometime this week in order to add additional guidance or clarification. I don't know if that's out yet. I haven't seen it.
Yeah, I haven't necessarily seen it either. I have a few FAQs here. I was just trying to quickly roll through and see if it speaks to the sole proprietors. So that portion of the program opens up on Friday. So and that may be one of those questions that I might have to have you send me an email so I can better answer it. Because I want to make sure I'm giving you accurate information. So if you would want to send me an email directly, my email is twyla.kennedy@sba.gov, and just send your question to me directly, and I will see. I know I've seen something in here regarding, kind of the figuring out for sole proprietors, and I'll see if I can dig that up so I give you good information.
All right, so we're tabling that one for the moment in order to make sure we come up with something that's specific and accurate. Going back here, sorry, scrolling back. Make sure I don't miss any. Can you get both the PPP loan and the disaster loan advance for the $10,000 or up to $10,000?
And the answer is yes.
Okay.
You can have one of each.
We answered that one. If businesses are not allowed to operate, and this goes back to the 8-week time start, that's the one from you, Tim. So I'm just going to say that we're working on that one still, but at the moment we think that it starts basically with the loan, coinciding with the beginning of the loan. How do you find a lender for PPP loans? Seems not all lenders are listed on the SBA website for Minnesota and are doing the PPP loans.
So the list that we have on our website is the list of lenders that we work with on a regular basis. So it's the ones that work within our 7A guarantee program. when SBA opened up this program, they did open up a little bit wider. So if you go to the PPP website, there's a link and you can put your zip code in and it will come up with a list. The only thing we don't like about it is it lists 5 lenders at a time, you know, so it's instead of giving you like a nice big map that's got, you know, a bunch or listing like maybe 15 or 20 of them at a time, it lists 5 lenders at a time. But you can see if there's anybody there that's listed in there that maybe came on board just for the PPP program. Here's what I'll say about the program itself from a capacity standpoint. We are hearing from some lenders that because of the volume, you know, the sheer number of business owners that are applying for the program, some of them are getting to capacity limits. So, you know, from a capacity standpoint, I mean, that could be the number of people that they have available, you know, loan officers that can, you know, that can review the loan. So they have them stacked up, and so their loan officers have to go through the applications and they have to enter the information and things in like that. So there's some capacity issues that way. There's also some capacity issues from the standpoint of like the capitalization, the loan loss reserve funds for the bank. So they get to a point where they reach their lending limit. So what I would say is I always suggest that any business owner, when they're looking to do business lending, start with the bank that you have a relationship with. The bankers tell me that relationships are important. So I would say start with a bank that you have a relationship with and see if they're participating. And then if not, I am hearing anecdotally that there are other lenders that are willing to work with business owners that they may not have a relationship with. You may have to make some phone calls to find them. But I've heard from a couple of people who had luck that way, where they were clients or customers of a particular bank, and that bank wasn't going to be able to assist them, and they were able to find another bank that could.
All right. When it comes to the debt relief portions that basically are a 6-month deferral, it described that the SBA is making the payments basically for people within that 6 months. Does that mean that your loan amount is sort of being paid for? So are you just pushing out all the payments into the future with interest accruing, or is SBA actually forgiving the principal portion of the payments along the way?
No, SBA is actually making the payment. So this isn't like you're getting a deferment, you know, like with the PPP, there's a deferment piece in there. There's that 6-month deferment if you end up with a loan. So the debt relief program is not a deferment of your payments. SBA is actually covering the principal, interest, and there's, with the 7A program, and I believe 504 as well, there are ongoing fees that occur. So SBA is covering the principal, the interest, and the fees. So it's not a deferral. It's actually that those payments are being made.
So that's why the debt relief part is that it's actually paying your debt payments during that time frame.
Yes. So if you're a current customer, if you're a person that if you currently have a 504, a 7A, or a microloan, I would say just if you haven't had contact from that lender yet, go ahead and contact your lender and you know, talk to them just to make sure that your loan is being covered.
All right, next question. When a company signs up for the EIDL loan, or EIDL loan as we've been referring to it, how long should they expect that loan to be? I'm assuming you mean how long should we expect that loan to be released to the company, or when would that loan be awarded? And is it safe to assume churches can use these programs since it includes 501c3s?
Okay, so the time frame for releasing the funds, the advance is supposed to be released within 3 to 5 days. The loan portion itself, I think, takes a little bit longer than that. Initially, we were being told it would take 3 weeks after approval. I don't know if that's still the standard, because my initial training was from the disaster center was probably about 3 weeks ago. We haven't heard any real updates on the time frame, but in that time, the portal has changed and how we're handling them. So I don't know if they've made changes to that time frame. As far as churches, yes, religious organizations are eligible to participate in both the EIDL and the PPP programs.
All right. And Tim's asking about whether if they put incremental funding into the program, but I think we'll wait and see whether or not that happens, because whether or not it would go into an existing program or be a wholly new round of financing in some other way is not clear at this point. Specific, let's see, there's one from Amy from another attendee. I hope I am one of the no collateral lenders you mentioned. Do you know if he is? I'm not sure I understand that question.
Matt, I think I was asking, do you know if this person is one of the no collateral lenders?
Ah, okay. Well, I think that the idea of there being a no collateral lender is up to the program, and PPP is saying no collateral necessary for that. I think EIDL said the same thing. Is that right, Twyla?
So within EIDL, there were different requirements on collateral. I believe the collateral for that loan was if the loan was over $25,000. SBA was going to take a UCC filing on business assets.
There you go. Thank you for that reminder, and I think that might be all the questions. So sorry if I didn't get to the question the way you intended it. I apologize. Feel free to jump in via your voice right now if there's something that you were trying to get across that we sort of fumbled. And I'll just wait a minute to see if somebody wants to do that. You'd have to take yourself off mute and then be able to say something.
Hi, Matt.
Yeah, Tim.
Yeah. No, the only question I had, and we have no idea if they will fund more dollars for the program. I think it's likely, but if it's based off of start date and say, and I'm not saying this is happening right now, but if you have a competitor that did not apply right away, and we have to use our dollars from the PPP in terms of paying people that would be on unemployment and they're not having to, that is a significant disadvantage. That's all I wanted to say is that, you know, the way we're looking at it is, I know they want full employment by June 30th, and we want it to be before then. Right. But the point is, I just don't understand why it's the loan date versus if they put more funds into the system, someone applies later, they almost have an advantage.
We'll see if that additional funding happens as far as reloading in a particular existing program, or whether it's sort of net new. I think people are calling out sort of things that they think of as, you know, flaws or gaps. So that's where legislators, I think, are probably getting a lot of feedback. But with that said, thanks for clarifying that. And we'll just have to wait and see at this point, because I do think that you know, this is great assistance to be had, and that's probably the first answer to reemphasize. But of course, it does come with certain constraints, and the constraints of the PPP program were largely around employ people as quickly as possible for at least a couple of months and take that that burden of the cost off of businesses as much as possible with what was funded. So I think that intent is out there, but then as it starts to play out over time, and if things change a little bit, it'll be interesting to see how we adapt as well. So I'm gonna leave it at that. Any other questions that somebody, I didn't get another voice that I thought popped in, so I think we might be done. I wanna thank Twyla Kennedy from the SBA Twyla, thank you very much for participating with us today and for trying to help clarify. And if people didn't get it, her email address is in the chat, so you could try to reach out to her, or you could feel free to engage with our SBDC office, which our website is westcentralmnsbdc.com. But if you search for SBDC and look there, you're going to find our offices at Concordia. That's the main way to contact us. And then we have consultants that work throughout our region that oftentimes work directly with people face to face, or I guess not right at this point face to face, but we are working all remotely right at the moment. But we are happy to help and provide more input, and we all learn a little bit as we go. So thanks again, Twyla, and thanks everybody for attending. I hope you all have a great day. Stay safe, stay healthy, stay strong.
Thank you, Twyla and Matt.
Bye-bye.
Thanks, Matt. Thanks, Amy.
Thanks, everyone. The program is great. I mean, great stuff.
Thank you very much.
Thank you.
Thank you.